Ladies and gentlemen of the crypto space, we are live on a Friday, January 17th at 11:56 a.m. If you are crawling out of bed just now, one, you're lucky. Two, you're probably seeing that there's one heck of a rally going on. And it's decent sized rally. It's not like an exuberant rally, but we're up 5% on Bitcoin for the day. That is one hell of a weekly candle that is shaping up. Um, we're pushing past the candle body closes from a couple weeks back. 2 days, 8 hours left in the candle. This is going to be an interesting weekly candle. And that's in the backdrop of the move indicator rolling down below 93. And interesting action on the DXY. And that is what we look for confluence. We want to see the DXY come down. We want to see bond market volatility come down. And when you have this, it tells a bit of a story. If Bitcoin's rallying, moves coming down, the dollar's coming down, that is confluence suggesting continuation in the prevailing direction. And right about now, for quite some time since the break of the ceiling in November, the prevailing direction is up, higher highs. We've seen some decent higher lows as well. We never saw a meaningful retest of the 73,000 range, but that doesn't mean much because of supply and demand and the nature and reality for Bitcoin as an extremely volatile asset. You don't always get a retest in the relative short term. You might get a retest in a year or 2 years, if you know what I'm saying. The bear market retest. But as of right now, over 105 for Bitcoin. Jeepers, up almost 5% of the day for Curve as well, 6.23% for Convex. Frax is finally again a little bit of a bid, 8.5%. Spell up 14%. I keep this chart there not because I'm a abracadabra investor, but because one, I've always appreciated what they built. It's functional and it survived, which is quite meaningful to say the least. And two, they have been the most consistent, predictable vote renter through the entire bear market 22, 23, 2024. They rented 5 digits plus per week, every week, like clockwork. So, from a cash flow perspective, that is quite considerable. Um, they're always, if not a go to, a fallback, depending on volatility and vote rental and how much capital is being deployed. They are always there, which is quite interesting to say the least. Pull up the move indicator, nice rejections of the 200 to the upside. Structurally, from a technical standpoint, that's interesting. Volatility indicator is something I always mention, kind of preface any argument I make about moving averages on this chart. But that is interesting to say the least. Look at the last interactions of the 200 SMA on the weekly. Big wick through, big wicks through, but generally closes from a weekly perspective. And right now, we're seeing two wicks getting stopped, not even a wick breaching the 200 SMA to the upside, the wicks getting stopped out at the 200 SMA to the upside. So this is a comforting position. Plus, as a forward-looking indicator, because this is a volatility indicator of the bond market, long duration treasuries, more specifically. But look at the 10-year. That's relatively low volatility. Talking about 0.17% on the day. Now we're talking. Once the damn volatility collapses on long duration treasuries, 10 to 30 years, then we get to see the way global finance optimally works. Could only make good decisions with collateral in a relatively low volatility environment. You'll understand that, or would best understand that, in the context of throwing Bitcoin on Aave. If your Bitcoin price is going all over the place, you don't know how much you can borrow. You don't know what your health factor is going to be under what conditions because it's too damn volatile. But when the volatility collapses, all right, fine. 1.5 and a health factor, all right, great. But if you got $10,000, $20,000 price swings on a daily basis just for a little bit of a story to best understand it, you're probably not going to be at 1.5. You're a little uncertain. So you're at two, two and a half, I don't know, three for all I know. So that is exactly what the move indicator is expressive of. But instead of the relatively microscopic Bitcoin, we're talking about the global financial system and hundreds of trillions of dollars. Gold, 27.14. Oil back above, way above 70. Top end of the 70s, 77.6. Jeepers. Okay. 10-year Chinese, marginally negative on the day, but this is just such an extraordinary chart. You zoom out here to a 6 month and you see the collapse of the Chinese economy. So obviously, that's a broad statement, and there's obviously specifics to an economy and how it works. So plenty of things can be relatively normal there, but this is depictive of a structural fracture in that normalcy, at least from a financial standpoint. You talk about daily normal operations of banking infrastructure, capital flows, so on and so forth, central bank activity. This throws everything into a tailspin. Now, you might not see it necessarily from a general public perspective, considering the stimulus that China loves to do and has started doing, and probably the inevitable devaluation of the yuan. That's separate and apart from understanding that their economic system is fracturing, has fractured, and is continuing to fracture. This is probably one of the most extraordinary charts going on right now. I did share some other charts. This chart was crazy. And this is our bond market, the United States bond market. This means it's basically a shit investment. Is it 15 plus treasuries, 10-year rolling annualized returns? Jesus. Haven't seen returns on treasury investments like this since 1960. So this is real data. This is real data that indicates that while we talk about inflation, we talk about consumer price inflation, we talk about equities markets rallying, but there's a good part of our entire economic system, frankly, every country, that says things are pretty shit. Like the foundation is hollow and it's structurally unsound. And we come right back to the House of Cards conversation, which is what leads so many folks to the crypto space and trying to understand why Bitcoin is significant. But then it's ever so important to inspect beyond just the shit realities of the global financial system and looking for a better money to understand really how a financial system works. And that obviously leads us into the entire conversation of crypto fintech, crypto enterprise, and investments that can be done to take advantage and expose yourself to the best of these crypto markets. Here's the relatively increasingly volatile assets that I inspect. I'm not too far out on the risk curve in crypto terms, at least. I'm not too into the DeFi or the agents, although those are making some serious moves. But that's from a capital gain standpoint. It just is too much activity, too much work is involved, and that is okay. That's probably one of the biggest lessons that I could ever teach folks. For instance, if you're starting out with like 100 grand and your expectation is, let's say you start out with 100 grand in 2020 and your expectation is like 10 mil in 2030, dial it back two and a half, five. even five. You're coming from 100 grand. So the expectations of these astronomical numbers over relatively short periods of time is what leads to failure. Always set reasonable expectations. Like it is very reasonable, probably even in a diversified equities portfolio to turn 100 grand into 10 mil, into 1 mil in 10 years. That is not the most insane thought if you're in a relatively diversified, um, not micro cap, but small, mid cap, technologies like even biotech and stuff that isn't hasn't caught the bid yet, but is working on something that's significant, and you're betting that they release a significant product and it's consumed or it's bought, so on and so forth. So it's a reasonable expectation to produce a 10x over a 10-year time frame, even in equities terms. I think that's relatively short-sighted in crypto terms. And that is why I say like 100 grand into like 2.5 mil or 5 mil in a 10-year period is probably like the 5 mil is like a decent expectation. 2.5 is probably reasonable over a 10-year period. You start talking about 100 grand to 10 mil over a 10-year period, and that's a stretch. Or dare we talk about nine figures? That's even more of a stretch. The capital gains along the way is insane. There must be a structured framework for managing this capital. Otherwise, it's just shots in the dark, unmanageable. It's a frenzy of activity. And then you find yourself in a year or two from now trying to figure out the damn accounting and you drive yourself nuts. So it is just so imperative to be reasonable. Be reasonable, ladies and gentlemen. Pendle with a nice bid today. Let's take a look at the Spectra chart. Spectra and Pendle. Go figure. So some very obvious levels on the chart. We could maybe drop this down a bit of a tick. Okay. So obviously, now I guess we're ranging. We're hovering around the mid tier, in my opinion. I got four decent levels on this chart that tell us where we're at. Higher lows, relatively short-term time frame candles, 1 hour candles, but it gives us more granularity over the last bit of time. And this is an interesting chart to say the least. Generally speaking, there's a great deal of emissions, but there is a backdrop of it being on base. There's a backdrop of Coinbase. There's a backdrop of it as compared to Pendle. There's a backdrop of it using Curve LPs and the integrations and the potential significance of the protocol in CRV-USD and money terms. So there's a very interesting backdrop for the protocol. And what I wrestle with in my mind is whether you this is in some regards a derivative, because if this does well, that means that the assets being deployed on it are doing well. So everything's a beta of something, a beta of a beta of a beta of a beta. It's like that really is where I'm at with regard to Ethereum. It's no point in owning Ethereum because all of these fintech businesses are inherently a beta of Ethereum. Now, and that is what I often say. You look for reasons to neglect owning something because there's too much shit to own. You can't own everything. So look for reasons why you could get something out of the portfolio. You don't need exposure to it. Increasingly concentrated portfolios tend to do the best or tend to perform the best. Increasingly diversified portfolios tend to survive the longest. So that's where I'm probably at. It's relatively new. They just converted from AP Wine, and it's a derivative. If this does well, everything on it is doing well because that means the capital's flowing in. That means the leverage is spinning up. That means the LPs are flowing, and all the LPs are on Curve. That means Curve's printing fees. So I retain the position of the base layer maximalist for a reason. I see a derivative, I'm like, I already have exposure to it indirectly. So that's fine. That's okay with me. I struggle to find reasons not to buy things. And I'm pretty good at it. And there's a lot of reasons that you don't need to own almost anything other than the core portfolio that should be really, 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 really picky to acquire. Yes, Shadow launched. Who mentioned? Trevor mentioned. Yes, indeed. It's nice size airdrop. Obviously, Shadow is relatively weak. Big rally off the get-go, rolling tops. Are we surprised? It's a decay. It's a disinflationary protocol, which is nicely designed, but disinflation takes a fair amount of time to kick in. It took a couple of years for meaningful disinflation to kick in for Curve. This literally just launched, so you're going through the initial hyperinflationary decay. Um, Certainly not something that I would even consider acquiring at a 25 mil market cap compared to other kingdom assets. This is not a specific kingdom asset, but obviously, as Trevor, you mentioned, we have exposure to it vis-a-vis Ramsey's. So that is nice. I'm not inclined to take a haircut on a claim. I'm not necessarily inclined to claim early. That's probably a basis consideration because I expect continued depreciation. So obviously, when you claim, that's your basis. I'm probably inclined to just say thank you. It's a freebie. You grab it. It continues its decline. You get the 5 mil market cap or less. All right, now you're talking about reasonable numbers compared to the comps. Um, and that's by 2 cents on Sonic. We don't know what's going to play out with overall Sonic landscape, meaning obviously you got Hey Anon and what Danny's working on. You obviously have old school um, Solidly. You got Shadow. You got Andre behind it, getting it listed on Binance, so on and so forth. So generally, I do expect a similar type of frenzy on Sonic that we had on Phantom, which implies the age-old question of how do you have exposure and what kind of time frame you want that exposure to be. Given it's so new, you can't really justify an investment unless you already have exposure. So fortunately, in that regard, the Solidly exposure I am quite content with. I'm quite impressed with the tech stack that Solidly has. I think they need probably a UI refresh, certainly marketing, but they don't have the protocol revenue to finance those kinds of things. I don't know what plays out in that regard, but it would be nice to see Solidly gain some traction. It is what it is. Not much I could complain about. And fortunately, it's something owned, so it's not something to consider much, if at all. That's the beauty of owning a position versus temporarily having or renting a position, as I define it, to sell it. When you buy something, I own it. It's a purchase, non refundable purchase of cash flow, to be most specific. Anthony, morning cap is Coinbase news for Morpho, bullish for Contango. Listen, Contango is pretty goddamn interesting. Contango has paid some serious cash flow, and it's USDC, WBTC, and WETH denominated. It's literally probably some of the most interesting cash flow in the entire crypto space right now, which is really weird. And damn, well, I didn't see that one coming. Those are big ass cash flow candles. Wow. I mean, literally, last week's cash flow was 108%. The week before was 190% APR. With these candles, depending on dilution, obviously, there's an inverse proportionality there that I always discuss. We could be looking at over 100% next week, or maybe even higher than what the current APR is. And it's the denomination of the cash flow that's quite fascinating because it's just raking in fees because of folks engaging with the product that the business offers. And that's everything that I've talked about over the years. What is the fintech product? And this product has 400, let's see if there's a refresh, what the open interest is. Nope, that's it, $487 million of open interest for a protocol that is $6.45 million market cap. So let me say that again. It's a $6.45 million market cap that has $487 million worth of open interest. If you're at 10x leverage, that's 48.7 million dollars worth of deposits. There's this double-digit million-dollar deposits in a protocol that's worth less than $10 million. What is it? Net asset value. It's this is like deposits to NAV or something. Cash flow to NAV. This thing is underpriced in the context of open interest, deposits, consumption, and the cash flow, which in turn pays its quote unquote crypto dividend. Nobody's talking about this thing, and that's strange. And obviously, most people talk about the assets that you could talk about hyperbolically, the meme coins, the AI agents that you get 60%, 100% returns on a daily basis. You get all this FOMO. But I talk about assets, I talk about them from a business function standpoint. And what stands out isn't necessarily the shit that's going to be parabolic. But this is quite extraordinary from a business inspection standpoint. Uh, to say the least. The cash flow is quite extraordinary. The market cap is remarkably low. The open interest is through the roof, and the TVL, considering the open interest, is multiples of its market cap. That, in any traditional financial terms, screams mispriced asset. Let's go back to the list. If you're on X or on YouTube, feel welcome to throw your comments and questions. We will get to every question during the stream. And if you guys cut short on the questions, we'll cut the stream short as well. I mean, it's a bullish day. What's much to talk about? Everyone's excited. Everyone's portfolios are appreciating. That's a lovely thing on a Friday, especially given it's a 24/7 market, so we get to see how it behaves heading into a weekend after a bullish Friday. Anything interesting in the micro stuff? It's not really too micro. Velodrome with a 7% bid back above 14 cents. Nice to see. Volatile as ever. Horizontal chop. Range bound, so to speak. Where's Aerodrome? There's Aerodrome. 3% on the day. Back to a buck 35. Remarkable how that level clicked. Look at that level right there. Just boom. So levels are probably the strongest technical indicator. Moving averages, second strongest. Trends don't mean shit to me. Maybe from a breakout perspective, but that's not something I'm even considering engaging in at the moment. So this is a very interesting level. But ultimately, it produces a very comparable cash flow to plenty of other places in these markets that are investment grade, which means the question reduces to excess diversification, the position size considerations. I mean, what's the point? And then we come back to like Velodrome versus Aerodrome conversation. Velodrome is literally expanding to Sony ink on chain. Oh my God, USDT zero? Is that what it is? Or is it USDT O? USDT zero is wild. OFT standard from layer zero, partnered with Tether Deploy on ink, which is Kraken. The narrative there is wild. It's 2 minutes cross chain. That's what OFT standard facilitates. And it's not like dependent on liquidity. It's just boom. It's the same deploy that we see with money. It's like boom, 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 boom. You go chain to chain, chain to chain. So obviously that introduces an arbitrage consideration from their centralized business operations standpoint. But that is what seamless cross chain resolves, whether it's automated through contracts or it's manual through a centralized business entity. You need the cross chain arbitrage. You need to smooth out these prices across all the chains. And that is what layer zero omni-chain fungible tokens facilitates. Obviously CCIP as well, but that shit literally takes 20 minutes. Yeah, that's, Vote Market's using CCIP for cross chain. And that 20-minute transfer is really annoying. I don't think that's technologically reasonable, meaning, sure, it's technologically functional, but it's not reasonable as compared to it has become the status quo for cross chain. I mean, literally, you just have Ethereum mainnet to Arbitrum on Stargate is just maybe 8 minutes. So this 20-minute time frame for CCIP is not too interesting, quantitatively not competitive, and you can't compare it to a 90% reduction in time for a 2-minute OFT transfer of now Tether and money as it grows into the future. Mix in the house haircut. Yeah, I'm also bald, but I got a haircut a couple weeks back and no hat. Appreciate it though. Greetings, Cap. Greetings, Cap. Much pleasure. Much pleasure. Good morning, my Sakatsu's in the house. How are you, my friend? Hope everything's well. X Shadow airdrop we get will become bigger over time. In hindsight, may become the biggest airdrop for VE I'm cool with it. I let it sit. Um, the only thing in my mind right now is whether to claim now, because when you claim, you lock in basis and you got to record that. So might as well lock in the lower basis. It's not like you're liquidating this because it's probably burn to earn. I don't know. I'd have to look again at the shadow interface. But in any case, whatever. Claim it, lock it. If it produces $100 a week, that's great. That's lovely. Because in the future, if Sonic does well, now you have increased exposure to Sonic. I look forward to see what plays out with Solve. I've heard mixed opinions about the developers. That's kind of irrelevant considering they've stated we get airdrops as well from popular V33 protocols. So we will have exposure to Solve as well. And we'll get to compare and be critical or not uh, of the size of the airdrop. How well how offering they are compared to Shadow. So Shadow seems interesting. I am a big fan of the Kingdom protocols. They are some of the original actors that dealt with, post Solidly V1 release. So, and they've come a long way. So the two teams from a Solidly perspective that are most interesting is obviously Velodrome folks, including Aerodrome, and the Kingdom team. Unfortunately, the other ones haven't had as much traction, and that is what it is. The Kingdom team and the Velodrome team have paved the way for Solidly to become whatever it's going to become. Good to see that Solidly is still there, though, on Sonic. Literally, it's a cross chain. It is what it is. And previous historic drama aside, the current Solidly is cross chain. I mean, they literally have redundant cross-chain implementation for the VENF for Solidly. It's currently a technologically superior product to Kingdom. Um, Velodrome is really isolated to the optimistic superchain stack. Solidly is literally cross-chain, Arbitrum, Optimism, Base, Mainnet, Phantom, Sonic. So it is what it is. That is probably a classic example of the greatest tech isn't always the greatest investment. So that I'll leave that thought there for folks to simmer on it. First Epoch X Shadow exit fees will flow to the remaining X Shadow holders. Yay! Let folks exit. Great. It'll rebase the crap out of the position, and maybe there'll be an exuberant frenzy of financial activity on Sonic, and that just means more cash flow. Yay! Look forward to it. Fees and rebates will be huge. Yes, indeed. Free exposure to stuff. There's nothing better than it. The airdrop concept and airdrops have been a popular topic, especially more towards the beginning of 2024. Very popular airdrop season on Cosmos hubs and chains. So now we get a little blessing from an airdrop perspective for exposure to the Kingdom and other VE33 protocols. as I mentioned. This one is something I look forward to because it's Solana. And we looked at some of the data. I'm not going to digress too much, but the data is pretty wild for Solana. Still minus 9% week over week, but the stables on Solana are downright weird. Five, still at five. Wow, it's still bleeding up to $6.12 billion of stables on Solana. I mean, you're approaching Binance Smart Chain territory. Now, Binance Smart Chain has had the most amount of stables other than Ethereum mainnet for quite some time throughout the entirety of the bear market, six up at $7 billion. But this is quite interesting because Solana has left left the pack as compared to base at 3.84 plus 4.31% for the week. Arbitrum is very notable at a minus 14%. So I don't know what to make of that. I wouldn't think too much of it in terms of fintech business, but I would certainly have an expectation of decreased financial activity. And clearly, if though that much capital has left the chain, the question is more importantly, where did it go? Clearly, there's an internal flow of capital as well as an exogenous flow of capital in crypto space. And we're seeing that significant cash flow outperformance on Solana. Let's see if we have any data for Sonic yet. No data for Sonic yet. We can look in mainnet, see where we're at. Marginal positive, it's just up and right. $114 billion. Remember those posts I was making on X of the inflow since November 1st, 83.9 to 104. This is the amount of inflows, just the capital inflows to Ethereum. Mainnet is larger than the total amount of stable coins on all the popular chains. That's 30 plus billion dollars. You want to do well in capital management, you follow the money. And the money is mainnet. For better or for worse, transaction fees considered, that's where the capital is most concentrated. That's where the financial activity will be the most interesting. That's where the biggest businesses will be that cater to the largest actors that produce the most fees. That is just what capital flows say. That is the story of capital flows. Shadow tech stack, same as V3. Oh, is it V3? Oh, burn and earn. Is remarkably different. Once Sonic really kicks off from a financial activity perspective, Shadow will become the Vela Aero Sonic. Now we're talking. Now you get in my excitement flowing for what the crypto market is capable of. Probably bring us back to the DXY because the title of the stream is the chart of truth. And I don't even think I showed you guys the damn chart of truth. Ladies and gentlemen of the crypto space, this is what I would probably say the chart of truth right about now. You could have a similar inspection on like the move indicator. And it's very always important to understand what gives rise to this behavior, what gives rise to the move indicator, which is look at the 10-year treasury and you can see invalidation of directionality, for instance. But this is the chart of truth, ladies and gentlemen. And even more so, the chart of truth is what is on the chart of truth. It's like, oh, that's obvious and great. It's color coded. Red guppies. Red guppies, ladies and gentlemen. If this thing broke down back in the summer run of 2024 until September, that shit would have been crazy. You know why? Because you got gray guppies. Gray guppies turn into red guppies. And if you see red guppies on the DXY, that's what causes the crypto markets to go parabolic. That's like 20, 30%, 40%. And then obviously the meme coins do their stupid shit. But you have the big $100 million protocols, half a billion, $1 billion protocols ripping double-digit percents on a daily basis. That's what the crypto market does when the dollar meaningfully depreciates. This is a lovely double top in the 2020 to 2021 for Bitcoin. And it is so clear on the DXY from a weekly perspective. And these guppies, maybe it's coincidence, maybe it's just you're looking at the charts and you're like, oh, you're looking for correlation. But that's exactly what this chart tells as a story, better than maybe any other chart. This was the bull cycle, the bull market, as people historically called it. Here's your double top. Obvious, clear as day, color coded, baby. Here's your 2017 to 2018. Boom, that's it. I mean, folks, unless you're from like an earlier cycle, because it was weird in 2013. I mean, maybe, but this doesn't count because it's a different time for the crypto space. You didn't have fintech. There's no fintech in the crypto space back then. It was a different world back in 2013. Dare we talk about 2010? Nobody was such a microcosm for Bitcoin back then. But that was pretty obvious as well. And that's why it was so bullish. That's why you had such a rally. And now we're starting to see a relatively mature market with investment grade crypto businesses and enterprise. This is the inspection to have. This was your rallies. These were your rallies. And this was your primary rally in 2024, July of 24 to September. Ironically, it was a decent summer rally. And it was a gray guppy season. And you got a little bit gray. Q4 of 23 into January. And what was that? That was meme coins got a little hot. What was it? Meme coins and then Cosmos, or Cosmos, then meme coins, whatever. That was the story of H1 2024. That was the exciting stuff. And H2 24, Solana's still doing what the hell it's doing. We see the capital flows into Solana, pump.fun, agent bullshit. Okay. This is a very interesting position because at this level of the DXY, combined with the move indicator doing what it's doing right now below 100, we could be in for a dollar topping. Other folks are probably talking about this as well. 109. Incoming administration with a policy of devaluing the dollar. They need to combat the inflation that China's exporting. Or rather, better said, the deflation that they're exporting. They're in a deflationary collapse. So in order to reinflate and cause inflation internally in China, they need to export the deflation. So to combat that exportation of the deflation, countries around the world need to devalue and trigger a response in terms of inflation. They need to counter the deflation. This is a good spot for the dollar to top. This is a good spot for a continuation to the upside for crypto markets. Markets kind of screaming it. So when you get this neon green, this concentration of green, the breath to the upside of the dollar is ferocious. Look at this guppy concentration, and you're literally above all the guppies. We haven't been, there's barely any activity in the guppies. That's how volatile the dollar has been. If you go in an earlier time frame, you can see what I mean. Not really. When you get chop in the guppies, it's quite interesting. I don't know, here, like chop like this. You see this concentration where you enter the guppies, and that's a period of directionality reversal. Stop going off alarm. And back on the dollar, it's been so volatile that it's just like straight up top of the guppies, riding the top of the guppies. So it'd be nice to see a reversal here. It'd be nice to see 2025 start to do what folks are pretty much expecting it to do. Dollar depreciation, crypto bull market. Where the hell are the red guppies? Where are the red guppies? It's time already. Hey guys, what's with Sonium? They have a campaign going for jobs. Sonium should be interesting. I think it'll be slower than an ink on chain because it's a traditional tech company, Sony. So they're probably doing exactly what Inc.'s doing. They're thinking in terms of their business operations, placing them on chain and the products and services they want to build based on the tech infrastructure. I don't expect them to move as fast as like a Kraken, who is prepared, ready. They literally have Coinbase as an instruction manual of what they want to do, how they want to do it, how they can do it. I expect Sony's goals to be very different than a Kraken. So points and stuff, I don't know about the frenzy. Clearly, we see them suppressing meme coin activity in terms of the context of copyright. So that's interesting. That's great. That's Sony. They released their damn chain. Gives a shit about meme coins on a Sony chain. You know what I give a shit about on Sony chain? Modern warfare points. That's what I care about. So let Sony do their thing. Let's see their PlayStation start to use crypto as points. And Velodrome's already on Sonium. So it's like, when are people going to be playing PlayStation games, getting coins, and doing their thing from a velodrome standpoint? That's going to be so interesting. Is that not obvious? Is that not? Isn't that inevitable? Wouldn't that be weird if Sony didn't do that? Wouldn't that be really weird? Like they've tried to do Web3 and games on the blockchain, but PlayStation's still PlayStation. PlayStation is hot shit. PlayStation's awesome. And now they have a chain that's literally an optimistic super chain. Isn't the destination to have their games have crypto incentives and tokenomics and rewards and NFTs for badges? I might imagine your Modern Warfare badges, all that shit. It's all NFTs. Okay, so that's cool. That's really cool, and that is a very simple exposure. The exposure there is literally just Velodrome. So we got that covered. We got Kraken covered. This is Velodrome. Got a good part of Frax covered. Velodrome. Got Optimism covered. Velodrome. You see, there's a theme there. There's a theme there, and that is exactly why I was able to justify an outsized exposure to Velodrome, because of the exposure that Velodrome offers in turn. It's a self-expanding, continuing to give exposure. And that is probably one of the most powerful investments a person could make. It's kind of like it's like a corporation expanding to Europe, expanding to Australia, expanding to South America. That's maybe the meat space comparison of how to explain that behavior. Nothing beats free exposure. Nothing. So that's the airdrop concept, but Velodrome happens to keep it all in house, so it's even better than a damn airdrop, because all that activity funnels right back into boat rentals, which is fed by transaction fees. You can't make this shit up. You can't make up the incredible nature of these investments. There's nothing that's comparable in meat space. I get excited. I still get excited to this day thinking about it. Shadow isn't burned to earn. That's part of V3. That's missing from Kingdom. Okay, it's okay. I look forward to V3. I look forward to the things that I've chosen to own fulfilling my reasonable expectations of them. So V3 is definitely on the radar of cool shit that's coming. Bots and stuff. Do you think Contango points distribution and trading incentive system is going to act as a strong firewall against market cap? No idea. No idea. I think end of January, when the Otango burns and they finally finish that, maybe there's um, less depreciative pressure, but I don't give a crap about depreciative or appreciative pressure. Once you own something and lock something, it's the cash flow that matters. So we keep an eye on open interest. We keep an eye on weekly revenue. That's all that matters. And right about now, it's just a pretty interesting, pretty remarkable platform. It's loop that literally the design of the protocol is loop anything. That's pretty cool, which means it's everything and anything that could be looped in the crypto space has a place on Contango. I think it's going to be a really used protocol. It kind of reminds me of, actually, it's quite unique. It's nothing quite like it. But if it's more expensive to buy, that means relatively speaking, the revenue is less. Revenue is inversely proportional to your purchase price of the position. So the cheaper the price is actually the better. The more it remains mispriced, the more interesting it is. And remember, cash flow is always relative to basis. So for instance, if you buy right now and it's 100% APR and your position goes up 10x, your APR relative to spot is 10%. And let's say uh, always calculate your APR relative to basis. That's probably one of the biggest psychological hacks that I've done. Um, for instance, APR on Ramsey's has suffered to a degree, but relative to basis, you can still see 50, 60% APR. Basis means your entry price, ladies and gentlemen. So if you measure relative to basis, you're like, oh, that's cool. So if you buy 50 grand worth of something and it's producing 25% relative to basis, but relative to spot, it's 10%. That's because you made a good entry. It's how you inspect the portfolio also plays into your expectations and your degree of satisfaction. And the most important thing is to meet your expectations and be satisfied with your portfolio construction. It's X33 will be interesting. Oh, it's the novel tokenomics. I recall the conversations and the social media post. We'll see. Of anything, I'm the most patient person on the planet. North South. Hi, Noah. What do you think of Aura? It continues to maintain up to 50% APR for quite some time. On the TA side, it seems to have hit rock bottom. Potentially. I have retained my Aura exposure. Means I actually have to check when it expires because it has a time frame of a lock that I'm not fond of. Fuck. Well, how do you like that? Thanks for the reminder. Next week. Let's 6 mil. 42 cents. Zoom out. So it is a bit dated at this point, so we do have some data. Well, that is sure as hell. Hopefully rock frickin' bottom. Is it at? It's at you said 58.71%. It's very sophisticated protocol, and obviously it's based on balance tech, 80/20. So I think literally Contango uses Balancer for liquidity. Uh, that was the whole point of what Balancer wanted to do with the 80/20 positions is to attract governance tokens to increase the stability of their pricing. 80/20 of Contango has stabilized its pricing to a great degree. It still has its place. I've always liked its tech. Greatest tech isn't always the greatest investment. Balancer still pays pretty nicely. Obviously, you go for Balancer, you go to places like Warden and Hidden Hand. I think I have everything claimed, but if nope, so Balancer pays a couple bucks here and there. No, I don't want to create a new incentive. You go over to market and you go over to Balancer. It just recycles cash flow, so there's a fair amount of capital. This fills up. This will fill up by next week. So Balancer kind of pays really good. Um, If you go over to Warden, there's some additional rental opportunities. Quest, not for Balancer, but for Aura. Okay. Okay. Mid vote rental week, everything clears out. These things should populate a little bit more, but there's 63% for Aura. 37,000 Aura still needed. Still a decent opportunity. They're paying a fair amount. Let's go over to here. Let's see what Aura has. Fair amount of capital for Aura, 1333. That's a fair amount of capital. Um, I have still retained the auto voter option. What happened there? It still converts it. So this goes obviously through all the vote rental opportunities between Warden as well as Hidden Hand. I don't know. I don't know. I'm digressing a little bit. Probably coping to a degree with the depreciation of Aura, but it is what it is. And I guess maybe next week it unlocks. I get to contemplate. It's something to retain. I don't know. I don't know. I did retain it obviously in November of last year, earlier towards the summer of last year. One of the most important considerations when liquidating something is, are you doing it for a reason, a good reason? What are you going to use that capital for? Is it meaningful? And that is always important to double, triple think through. Sergio, president, account of four. Mix. Thanks. Sounds messy, but good to see the direct integration there. Yeah, I mean, a lot of stuff is messy in these crypto markets, but everything is certainly interesting. North South, I am fairly new here. Can you explain how you found Contango, AWA, Spectra, where to look, what tools do you use, what was your reasoning? Okay, we're definitely going to end on this question. Please, no more questions. So obviously, you have hindsight bias, meaning a lot of us folks have been here for years. So we have established portfolios, established ownership of things like the Curve ecosystem, which I define as the Curve Federation, which is countless stories over the years. So AWA and Spectra are straight out of Curve Federation. AWA is literally a Curve project, so not Spectra. Um, Spectra is tightly coupled with Curve, though. So Spectra is old school AP wine, and Spectra obviously pivoted to get in with the Curve Federation. So Spectra adopted VE tokenomics and uses Curve for LPing. And there's been some good social media commentary from folks like Fiddy, core Curve team, about Spectra. Now, obviously, we talk about DeFi money because that is yet another Curve project. So that's how we know and talk about AWA, Spectra, DeFi money. Contango is on the top list. It outperforms significantly, and I look sometimes take a peek at what's hot on the top list for like Arbitrum. Not really, not really Solana because that's just all bullshit meme coins. So I don't really look at stuff like that. But on Arbitrum, Contango was up there, and then I saw it released like a month earlier, and it was a Fjord Foundry. So they had a decent capital raise, which means they had decent liquidity in the LP, and it was popping off pretty nicely. So sometimes you see what's hot, but then you obviously have to exercise due diligence to establish what the hell they're doing. I don't know. I think a good part of my position was up here. And I was like, oh, I'm going to catch a breakout. Great. It broke out. Turns out it was a failed breakout. Whoopie do. Added to the position, I don't know, somewhere sixes, something like that. And now it's down at upper fives, flat at six. Decent level. So I was finding Contango. And then it was obviously the due diligence looking into their Dune dashboard. I was like, they were up at like 590 mil back then. So what the hell is going on? What is this? I always get worried about dilution. So how many tokens they have. So you look at maybe a token terminal or Etherscan. Um, and you could see they had a fair amount of Otango options. And then I saw on Discord it was the options were going to expire at the end of January. So I'm like, okay, cool. So we're going to have a significant decrease in dilution potential. So that means, all right, take a position. It's going to dilute, it's going to depreciate a little bit. Great. Doesn't matter. I'm not afraid of depreciation. I am most considerate of XYZ. How much does it cost and how much is it paying? And if there's $500 million worth of open interest, it's going to continue to pay and it's going to probably be paying a fair amount. Fortunately, Contango has a user interface display that tells you how much it's paying. So we had all the puzzle pieces to XYZ. We knew how much it cost, and if it depreciated, what we do. We knew how much it was paying, and we had a good sense of if it was going to continue to pay. Considering the scale and scope of Tango, it's basically on all chains and heavy used with significant open interest. So that really satisfied my XYZ inspection, and I was like, cool, because this was a rarity. Spectra doesn't satisfy that the same way right now. AWA doesn't satisfy it the same way right now. Interestingly enough, of those three protocols I just mentioned, AWA is probably the most interesting tech. AWA facilitates cross-chain. It's pretty wild because it's not just cross-chain, it's cross-chain trading. AWA is pretty unique. Spectra's Pendle story, but a more interesting user interface. Pendle also has VE tokenomics. Spectra is interesting because of its interest in Curve, use of Curve LPs, and that's about that for Spectra. It's pretty, and plus CRVUSD as well as money deployed on Spectra, so there was a bit of cross social media posting for a bit. That's my 2 cents on that. This thing remains, and this is what I come back to. Because in order to own a position, you have to spend money. So that's why Velodrome is so interesting, because you don't have to spend money and you get more exposure. That's why Kingdom is interesting, because you don't have to spend money, you get more exposure. Anything that's free is interesting. That's why airdrops are always so popular. This damn thing, especially with Spectra integration, up at 500 mil, 500K, that's how early it is. This thing is probably the most interesting thing I continue to look at. This is sophisticated. This is to understand DeFi.money, you have to understand CRUSD, which means you have to understand Curve, which means you have to understand Layer 0, OFT standard, which means you have to understand the concept of CDPs, which means you have to understand the concept of liabilities against collateral. Also means you have to understand what are dollars, which means you also have to understand how the world prints dollars, which means you also have to understand what is money. So, of all the protocols we talk about, CRVUSD and money are probably the most complicated to even begin to explain to anyone. And to top it all off, it's up to 1.02 mil. To top it all off, there's literally no money to be spent to have exposure. You just get points. So points are an expression of alignment, which may be worth nothing, which may be worth something. But if you're going to engage with the market, you have to choose whether to spend money. If you spend that money, you have no money anymore. This, you don't have to spend it. And expressing exposure, which means if points become something significant, you have significantly expressed your alignment with the protocol. That could potentially be an interesting reward considering the nature of the protocol. So this is where my mindset is at. I'm getting no money. I'm getting points. this is what interests me the most out of probably everything, other than because CRV-USD pays so nicely, and which is curve exposure, VECRV. This is probably the most interesting. I keep an eye on AWA because that's just incredible tech. Man, I am so interested to see what the hell happens with these points. Last question, we'll wrap it up for today. PT stable looping on Contango feels giving the warm fuzzies from right, right. So I still have a great deal of interest in Abracadabra because it pays so well from a vote rental standpoint. And now, um, similar, hi, similar warm and fuzzies with Contango. So we're just we come back to maybe where we started with where we are. Now you got to remember when you get red guppies, it doesn't matter what it is, everything goes parabolic. So now you really best think in terms of what is a well-constructed portfolio that goes up, goes down, goes up, goes down, doesn't matter, check back 2030, and you made cash the entire time. So everything's about to go up if we get the red guppies sooner than later. I rather encourage folks to think in terms of a well-structured portfolio that is sustainable. And what does sustainable mean? It means you could sleep at night and let time pass because time does the work. Because every time you buy something and sell something, capital gain, capital gain, capital gain. You're killing yourself from a personal tax obligation standpoint. So you need a more structured methodology for capital management. And that is kind of the core of every conversation we've had over the last couple of years. I'll end on a note, ladies and gentlemen. It's a Friday. Relax. Find your comfort zone. Got to be able to let time pass. I hope these conversations help. I hope our conversations on Discord help. January 17th, 12:58 p.m. 209 people made it to the end of the stream. I thank each and every one of you, and together we are all a little bit more rational because of it. Keep calm, keep relaxed. See you past the weekend next week. Until then, peace.